Well, we're a cash flow positive company. We're in production. It's like buying a call on precious metals. Every portfolio should have some exposure, and depending on their risk tolerance, the mining companies have the highest exposure to metal prices. So we reap the reward anytime metal prices go up. You see it on in our financial statements.
When we look at the production profile of the majors, you see that this year they produced less gold than last, and next year they're projected to produce even less. To fill that gap, they need to make acquisitions. And we believe that most of those acquisitions will be in Tier 1 jurisdictions, like Ontario, like Quebec, but specifically in Nevada.
Africa and West Africa is the most exciting place in the world right now for mine development. The last 12 months we've seen 6 or 7 new mines, substantial new mines coming along, ranging up to Fekola, which is hundreds of thousands of ounces a year.
From the 2018 Symposium on Natural Resources, sitting down with Rick Rule. Rick, how are you doing?
I'm doing great, Albert, and no small measure to you. Great job on the conference.
Thank you very much. We're having a lot of fun here. You and I just got out of a presentation, phenomenal presentation by Jim Grant. And I know you were excited to have him here. I was really excited. It was like meeting a little personal hero of mine. What did you think of his talk?
Well, I echo you. I've been a James Grant fanboy for many, many years, and so I did my best not to be sort of a fawning, slobbering fan. And I have to say my expectations were very high, and he exceeded them.
Yeah.
He's a great thinker. He is also, from my point of view, a dry, droll comedian.
Right.
Perhaps because his sense of humor is similar to mine. I think he's very funny.
Yeah, no, I was rolling inside, trying to keep my composure. It was great. A lot of insightful, obviously, insights about the market's interest rates, what's happening with yields right now. What was the big takeaway, aside from obviously enjoying the presentation very much? What were your takeaways from his talk?
I think, first of all, his sort of common sense approach to gold. First of all, make no mistake, it's money, principally.
Yeah.
I mean, all stuff that we've heard before, but he says it well. It is something that, if nothing else, it allows you to sleep nights. He said an important thing to remember about gold is it's been around for 3,000 years, and unlike no other asset class he knows, it's never gone to zero. If you are the kind of speculators looking for a move from 1,229 to 1,234, or something like that, a tick, that's irrelevant.
Right.
If, however, you are a wealthy person looking for a store of value, that's a fairly interesting observation. I had lunch with him too, and we talked about the experience as an example of the Vietnamese boat people. What allowed them to get out of Vietnam was gold. You could have had any amount of printed currency and you would have been stuck.
Right.
Gold got you out.
Right, yes. And part of what helped them thrive afterwards was actually America. Houston, Texas, actually. I have a lot of friends from families that survived that. Your talk was, obviously what people expect from you, more of a speculative nature, right? So where are the opportunities you talked about? So what did you tell the people today?
Well, I began my talk by reminding an audience that shouldn't need to be reminded, but does in trying times, about why we do what we do. It's useful to remember that everything in the world that's tangible was was grown or mined. And the story about mining investment is very much a story of the ascent of man, about the fact that there are more people every day, and those people want to eat and live in the fashion that you and I do, which is energy intensive and material intensive. And ongoing demand for the commodities that we produce is assured. The second part of the thesis, of course, is that when commodities are priced below the cost of production, it means that either the price rises or we go extinct because the stuff that keeps us alive doesn't exist. Well, you know what's going to happen in that circumstance. So, going beyond the sort of justification of what we do, I mentioned the fact that the industry has underinvested in exploration for 20 years. And given that mines aren't self-sustaining activities, that means that you have to pick up the pace. The industry has a good balance sheet now. They have good income statements, although they don't have good popular appeal. But what that means is that we're coming into a new exploration cycle. And I think there's three ways for investors and speculators in particular to play that. The first is that we are coming again into a mergers and acquisition cycle. This is absolutely going to occur in the next 18 to 24 months. The need is there on behalf of the major mining companies, but the means, by way of balance sheet strength and cash flow, is also there. When the need and the means are in place, the transactions take place. And we've started to see those, and we've started to see them at great multiples, which is wonderful. So at Sprott, we've assembled a preliminary list of 23 takeover targets, and I'm going to refine that list to about 5 that I buy with my own money. That list will of course be available to Sprott clients, and you will know that, for better or for worse, I'll own all 5. The second thing I'm going to be doing with my own money in the latter half of this year is I'm going to increase the size of my commitment to streaming and royalty companies, because I think the industry underappreciates their role in the coming mining finance cycle. Streaming and royalties are becoming an integral tool of mine development and mine exploration finance. And I think that people underestimate the ability of streaming and royalty companies to grow. We all know about their fantastic margins, but what we don't understand is that there can be a real impressive increase in assets under management in the next 5 years. And so I'm going to play that theme too. That's my lower risk theme. Finally, the exploration business is a business that I know a lot and joke about a lot. You know, I make fun of speculators. Bonnie, my wife, points out that all the money that I invest, I made speculating.
Right.
And so the exploration sector is important to me. I know that the major mining companies, having underinvested in exploration for 20 years, are coming back into an exploration cycle. They are customers for the juniors. If the juniors make a discovery, the majors will buy them. If a junior is involved in the process of exploration, like my favorite speculative asset class, the prospect generators, the spigot, the cash spigot, is already coming open to them again. The CEO of a major mining company here in Vancouver, who shall remain nameless, sat down with me earlier this year, laughed, said, "Rick, you have me where you want me. My exploration staff has been depleted by 7 years of ignoring them. The exploration pipeline is empty, the development pipeline is empty. My board has said I have to resume exploration, and without the help of Sprott and the prospect generators, I literally can't do it." So I'm going to be doing that too, particularly with regards to the prospect generators.
Do you think he's alone in that situation, or do you think that's fairly, I mean, you kind of spelled it out actually, right? That this is a common situation. Underinvestment, you just found someone who would admit it.
Sure. No, I can name another one, Tom Albanese, the ex-CEO of Rio Tinto. I had dinner with him in London recently, and I said, you know, my thesis is that we're coming into an exploration cycle. And he volunteered one unlike anything we've seen since the early 90s.
Wow. So with regard to the streamers, we had Randy Smallwood come up, give a great talk again. He, every year he resells me on what I've already been sold on, meaning you got me in 2015, but he comes back and delivers again. It's just as compelling as it was back then, and it's even more compelling now, this silver Wheaton.
In truth, it is more compelling now. He said that he had the ability to do large company-changing transactions from a $6 billion market cap. I mean, he had to do really big transactions. We've done 4 of them. So, I mean, for me, the most useful sales pitch I know is, "I told you so." And Randy has been able every year in this show to say, "I told you last year that this is what I was going to do, and I did it. And by the way, this is what I'm going to do next year." And he'll do it.
There's been some talk about peak gold. I've read a couple articles here and there. What are your thoughts on peak gold?
From the viewpoint of the gold market, I think peak gold is irrelevant. All the gold that's ever been mined is still supply. New mine supply increases world supply by 1.5 or 2% a year. Not a rounding error,
right,
but nothing like investor sentiment in some third world country.
Yeah.
From the point of view of the gold mining companies, that's a very different circumstance. A dire circumstance for some, a spectacular opportunity for those who have the ability to find it.
The companies that need large deposits, that need to find them,
Right.
they're going to struggle.
Right. What you will see, because of the dearth of deposits that actually make money, dial moving deposits, 5 million ounces plus, when those things are discovered, they will be sold for eye-popping multiples. And I'm really hoping to participate in those discoveries in the way that we've been lucky enough to in the past.
All right, let's leave it there. Rick, thanks for joining me on set. Appreciate it.
Pleasure. Thank you.